What's up, my Mind Your Money business folks? It's me yet again with another video on today's stock market news. And as always, hopefully you're in the market and not trying to time the market because that is simply impossible to do. What I would like to say first is please start investing, people. Investing is one of the most important things you can do in your life. Not the only thing, but one of the most important things to do in your life. And, I think about this often. Sometimes I think to myself, I started too late, which is not true. So no matter your age, whether you're young, you're old, it does not matter as long as you start now. We always worry about, what happened in the past, that time in the past. We worry about the future that's not here yet. Just worry about the time now. Now is what's important. You can't change the past, and you really can't say what's going to happen for sure in the future. However, what I do know is what I do today is setting the path and the foundation, or lack thereof, for the future. So think about that. What you're doing today will impact you at some point. If you do nothing, then expect nothing. So you will more than likely have nothing, right? So you have to put those mechanisms in place and stop stressing so much. Because, I used to stress a lot, and I now, even till this day, have to calm myself down. And even like yesterday, I had to tell myself, stop focusing so much on what has not even happened yet. Stay more focused on now. And that actually calmed me down quite a bit. And I was like, yeah, just work out. Worry about what you're doing now and stop stressing yourself or causing anxiety for no reason, right? So I just wanted to say that. Make sure that you're investing into yourself, into your family, into the stock market, which I'm going to talk about. I'm doing this early because I've been up since it's almost 6 a.m., but I've been up since 2:45 a.m. on a conference call. And I have another one in an hour. So I have to do this video because I have to go to work. Not that you care. Yeah, all right. So I'm doing the video now, and the market's going to be open for another 9 minutes. And maybe I'll be talking up until it closes, and I can tell you what's going on. I see a lot of red, but let's see what happened in the news. It says the NASDAQ, Dow, S&P 500 fall with divided Fed. So let's see what it talks about. What is happening? It says U.S. stocks fell on Wednesday as Wall Street digested mixed messages from Fed officials on U.S. interest rates. The S&P 500 slid 0.4%, ouch, while the Dow Jones Industrial Average declined about 0.3%, and the NASDAQ dropped 0.4%. That's a big drop. The declines marked a reversal from the index's earlier gains. So debate over the prospects for U.S. interest rate cuts, the big focus for markets right now, appear to pressure stocks. Comments from the Federal Reserve officials this week have hinted at growing disagreement on what the path of policy should be, given the cracks showing in the labor market. Fed Chair Jerome Powell reiterated in a speech on Tuesday that the central bank would proceed cautiously on further rate cuts, even as he left the door open to more easing. He also described stocks as fairly highly valued. Keep investing, people. Keep investing. Like this little hit that we took yesterday and even today. That's just a part of the market. Things are unsure right now, but what is not going away is the stock market. What is not going away is the means to make more money in appreciating assets like stocks, the right stock. So it also says here, Wall Street is now counting down to the release of the Fed's preferred inflation gauge, the Personal Consumption Expenditures Index, on Friday. So markets are watching for reassurance that inflation isn't posing a threat to high expectations for 2 more rate cuts this year. On Wednesday, fresh data from the Commerce Department Census Bureau showed new home sales unexpectedly surged in August as mortgage rates began to ease, bringing home buyers off the sidelines and releasing pent-up demand. Still, affordability concerns for home buyers persist. Yeah, because home prices are going up. They're going up. That's why you need to invest, people, and not leave your money in the bank. Leaving your money in the bank, you're losing money because you're getting like no type of interest rate on your money. So you're actually losing money because inflation, the prices of goods and services are going up. So if you're not making any money in your bank account and things are going up in price and that money isn't being invested, say things are going up 2 or 3%. And had your money been invested into something like, say I looked at my Palantir investment and it has gone up, I think 94% this year, right? So if I needed more money, say I could pull money from that investment if I needed it, right? So you have to look at it that way. You will make more money investing than you would leaving your money in the bank. Investing is not as hard as you think. I used to think going to college was hard. I thought it was only for smart people until I got my master's. I got my bachelor's, then I got my associates. I'm like, oh, that wasn't hard. Then I got my bachelor's. I was like, oh, that wasn't hard. Then I got my master's. All it required was dedication. Go to class, read the material, write your papers, turn in your assignments. Just do not procrastinate. You just stick with it, you can complete college. And I'm like, oh, I did it. So it wasn't as hard as I thought. Investing, I thought I would never invest on my own. I thought it was too hard. I thought it was, again, for smart people. Because to me, I thought it was complicated, like writing checks when I was a kid, right? Until you do it. Then once I started investing, it's not that hard. And then but the thing is, you have to do your research. Just like school, you have to do your research in order to complete your assignments. Investing, you need to do your research. You don't have to invest in everything. You know, you can just find one little sector. Like the biggest sector in the world right now for investments is technology. Like I talked about how NVIDIA just invested $100 billion in OpenAI. NVIDIA is the leader in AI technology. You know, and they're calling this AI boom the next, pretty much the next industrial revolution. It's revolutionizing everything, the whole entire world. And you know, we have these stocks in the US called the Magnificent Seven that includes like Amazon, Meta, Facebook, NVIDIA, Google, so on and so forth. And those 7 companies are driving the market. They are a part of the S&P 500, and those 7 companies are making the bulk of the returns within the S&P 500. Of 500 companies, 7 of them are making the bulk of the money, and all 7 of those companies are in technology. So why are you not investing in those things? You're buying the new iPhone 17. You're buying these latest computers. You're investing in Starlink, internet. You have a Tesla. You're buying Nike. You're going to Starbucks. So why are you not investing in these things that you're spending so much money on? So maybe you should stop spending, create your budget, cut it, and invest it into those things to where it makes you money. Now when people go buy Starbucks, they're making you money because they're investing into your company. Because when you buy these stocks, you're pretty much an owner in these companies. I get emails all the time from Charles Schwab talking about, you know, Apple, Tesla, their votes that are coming up, NVIDIA, to where me as a stock owner can call in and weigh in and place a vote on these different scenarios and situations because I am now an owner of those companies. And they're spending billions of dollars on what NVIDIA is creating. These companies like Meta, Tesla, everybody. Anyway, I just had to say that. So let me finish this so I could get out of here. So it says Tesla, just talking about Tesla. Tesla's shares climbed as much as 3% and were on track to close at their highest levels in 2025 as analysts at investing firm Mizuho Securities lifted their price outlook for the stock to $450, noting the EV maker is seeing only a muted impact from tariffs and boosting optimism for the company's robotaxi ambition. You know, they're now saying there's going to be a point in time, if you own a Tesla, a self-driving Tesla, you know, they're coming out with these robo-taxis. You can have your car drive you to work, or you can drive yourself to work. You can go to work and you will be able to put in these settings within your car, and your car can leave and go out and provide, can be used as a taxi because it's a self-driving car. And so you're at work and your car could be out making you money, and you can set the timer, set the settings to where at this particular time you accept no more taxis. You drive back to my work to pick me up, to take me home. That is the type of thing that's going to be happening in the future and more. So you can have your car make you money. You know, you have Tesla that's invested into Starlink, that's doing major things. With the internet, they're talking now about creating a phone. Tesla's creating a phone. Tesla has stuff, spaceships. They're doing a lot, right? So if you're not, again, the time is now. No matter how old you are, how young you are, now is the time to do something. Okay. Also, it says here, this is the last thing. It says that at the same time, Micron, stronger than expected quarterly earnings, because it came out yesterday, delivered a positive signal for the AI trade, though shares in the memory chip maker, which supplies semiconductor NVIDIA's AI systems, fell on Wednesday. I remember I had some Micron stock. I sold it because I had too many individual stocks, right? And I had to trim down because there's only so much your money can do depending upon how much you're investing each week, each month, right? So I had to trim down my investments because I was buying too many things and I was only able to get a couple of shares a month, right? So yeah, I just wanted to say that. I've said a lot. Oh, and look, I've talked up until now and the market just closed. So let's see what happened. So Nvidia took another loss today, losing $1.46, closing out at $176.97. I believe by the end of the year, no, I'm not going to say because I haven't done the research. But yeah, that's where Nvidia is at right now. Palantir lost, I'm talking about Palantir, lost $2.99 today, closing out at $179.56. Oh, also, I was looking at my portfolio. My Nvidia stock has gained 55% this year. My Palantir, like I said, was at 94%. And my Broadcom stock has gained 85% returns. Those are the returns. What has your bank, or what is your bank account giving you? That savings account that you have, say you're $25,000 in. You're not what are you getting, like $1 dividend that's placed back into your account every month from that credit union or that bank? Where if you had that $25,000, say in Palantir, had you bought it a year ago, you would have made almost 100% return, meaning you would have about $40-something thousand more. Not 40. If you had 25,000, say you had invested at 25,000, say you would have about 40. You would have about 40 something $1,000 in that investment account. So your money could have almost doubled, but you left it in the bank and you're making dollars and cents on it. So just think about that. My information technology ETF, FTEC, lost $1.64 today, closing out at $220. And my FTEC was up. This was yesterday. It's going to go down because they took a loss today. But yesterday it was up, I believe it was up 19% for the year. SPLG, my S&P 500 ETF, lost 27 cents today, closing out at $78. When I checked it yesterday, I was up over 15% on that. Broadcom, Oh, Broadcom gained 37 cents today, closing out at $339.31. Tesla. Tesla gained $16.94 today, closing out at $442.79. Again, just in April, Tesla was down to 200 and something dollars. I don't know the exact amount. It's double that. It's up to $442.79 now. Now, but this is the stock market. You know, you have your good days, you have your bad days. That's why I read the news and I see what's going on. Because when you invest your money, you know, you can say it's a gamble, but that's all investments. If you're investing into your company's 401k, same thing. Or if you're in the government, you have TSP, which is our 401k. Everything's a gamble because you're putting your money there. Your money being in the bank is also a gamble. But you know, the thing with the stock market is up and it's down. But over time, you know, I'm in this for the long haul. Again, going back to the S&P 500. That's why 50% of my investment each month goes into the S&P 500. The S&P 500, you can say the S&P 500 is old reliable. You can rely on that one. Over the last 100 years, the S&P 500 has brought back at least 10% returns on your investment. You can look it up, do your research. Old faithful is the S&P 500. You take chances when you invest in individual stocks like Nvidia, Broadcom, Tesla, because if those companies go down, you're losing all of your money that you had in that one stock. But if you have your money diversified into like an S&P 500, these different types of ETF. Now I've learned about SMH that I'm doing more research on pertaining to AI, but it's an ETF. FTEC, Information Technology ETF, your money's diversified. So when one company goes down, you don't lose everything that you have within that investment, right? So I'm going to end this video here. So like, comment, subscribe, share this video. Let me know what you think. If you think anything at all, invest, people. If you're in debt, you need to get out of debt. If you're, you know, and the only way to get out of debt is by creating a plan, and that plan is called a budget. So you can get rid of your debt and become debt free like I am. I want that for you, but you have to want it for yourself. If you don't, then continue to do what you're doing or do nothing at all. I mean, it's your life, right? So yeah, I gotta go. I gotta go. I feel like I should be saying something else, but I'm not gonna say anything else. All right, so again, like, comment, subscribe, share this video. Let me know what you think. If you think anything at all. And remember, all the views in this video is for entertainment purposes only. It just expresses my opinion. So please consult with a financial advisor before you invest any of your hard-earned money. All right, so you guys take care. Peace.